And if so, then what sort of levels are we looking at on the downside? So let us go into the next chart. Now Fibonacci retracements. This is one of the best tools to use when the index is correcting or stocks are correcting, for a level to be an entry point or a level to watch out for some reversal signals. Now if we look into this, the shorter term correction levels for the up move from 13,200 to 17,493 comes to somewhere around 15,400 to 14,900. Ideally, one would expect the correction to stop between 38 to 50% if it's a strong move. A deeper correction may go towards 61%, but in that case, it may see a stopover around the 38 or the 50% mark. Now that is the shorter term retracement. So we have 15,400 out here. Then we look towards the longer term Fibonacci retracement. Now the longer term means the up move which started around 8,000 levels to 17,500. If we consider the current down move to be a retracement of the total run up, the levels which we come into count are 15,270, 13,900. So even if we are taking a case that the index has to go down much lower, taking a full down retracement, it should have a stopover around 15,270. Or if we see the previous move down in July, the retracement went just below 23.6% and we saw a huge recovery. So we have seen the index reverse from 23.6% of the entire up move last time, wherein again we thought about it to being a major retracement. So right now also I would like to consider 15,270 as an important level in the near term. So the first thing which we have supporting out here is the shorter term Fibonacci retracement, as well as the longer term looking towards 23.6%. Yes, if the things go wrong in the next few months, the levels to watch are 13,900 to 12,800. Although I would be looking towards 15,270 as a crucial one. Or in the short term, we are definitely looking towards a bounce from these levels. And we may review in the next few weeks how do we turn around from this point. Now, why am I looking towards 15,200, 15,400? Now let us look at some other charts. Sensex inverted head and shoulders cup and handle. Now what we look out here is a possible inverted head and shoulders. Now this was also discussed some months back, wherein people were looking towards a head and shoulders downside. At the same time there is a possibility of an upside head and shoulders. Now if readers have been following my blog, they would remember that when I discussed about the head and shoulders around June, July, that unless we see a testing of the neckline, we may not be comfortable with calling it to be a head and shoulders, and the risk could be high. So a test of the neckline or just below it confirms the next move. So as a trader, one should not be very gung-ho about a head and shoulders pattern, because there is always a chance of the testing of the neckline. Now what we see out here is there was a whole lot of bullishness when we crossed 15,580, calling it to be an inverted head and shoulders. We saw the index coming down to 14,700. Then again when we went to 16,000 levels, we saw a small drop to 15,350. Now finally when we saw up move above 16,000, 16,500, people were again gung-ho and looking towards huge targets, wherein people had started talking about 20,000. And back again we are coming close to the neckline area, or what you call as the cup and handle zone, which actually if look towards it comes to around 16,000. But if we see a cluster of areas, The inverted head and shoulders break breakout, if we see to be in the range of clusters, wherein I am talking about previous tops, previous bottoms, there are lot many tops around 15580. If you see, denoted by the arrows, as well as lot many bottoms around this zone also. So we have a good cluster of supports. Technically, if we look into the simple part, is whenever a top is crossed, it becomes a support in further moves. So we have a range of clusters around 15,500 to 15,300. So this is a good band of support. So till we don't see a weekly close or a sustained closing above below this levels, we may actually be very bullish on the charts. Now, so we have yet another consideration which is looking towards 15,500 to be a strong support. The next one which I am looking at is the moving averages. Although moving averages are not supposed to be strict supports, what we see out here is the 50-day moving average is broken. Yes, but it was broken in July as well, and it might have been broken on the upside also in the previous pullbacks, but we saw the index to be correcting further. So it is not a strict consideration, but what we look into is the 100-day moving average comes to around 15,450, and the 200-day exponential moving average comes to 14,300. So a simple calculation tells me either the index stops at 15,450 or it goes to 14,300. Now this is a very novice and amateur way of calculating technically, but yet again the level comes to 15,450.